Hello, and welcome to Tech Talk, the Bankers video series looking at the developments in the fintech world. I'm Joy McKnight, Technology Editor at The Banker, and in the studio with me is Ollie Purdue, founder and CEO of Loot, a digital-only banking experience. Thanks so much for joining us today, Ollie. Can you tell me a little bit about Loot, your business model, and how it's developed?
We're building a digital challenger bank focused on millennials. The initial concept was that millennial segments are really underserved by traditional banks. A traditional bank can only show you your balance and your recent transactions, and the use of data there is just not good enough to help people with basic financial needs. Our business model is pretty simple. We want to undercut the banks in terms of our operating expenses. We're like 90% cheaper than a bank to run, probably even more than that, and then have the same margins on financial products. So if we were to build an overdraft, we could be much smarter with how we offer it to our users, but at the same time charge the same rates. And that means that the current account banking model and business model is much more efficient to us than it is to a traditional bank.
Okay, and what are some of the sort of products that you're aiming directly at millennials?
So we are live with the current account now. So we've got a current account that lets you sign up online in 5 minutes. You can get a savings account, you can use it for traveling abroad at kind of really low FX rates. All of that's built on live. Then we're looking at other areas that our segment will use financial products and then rebuilding those so they're more suitable and better.
Okay, and you also have a predictive spending part to the products, do you?
Yeah, so the product's very good at budgeting. So for instance, the app, you tell the app how much money you want to spend, and the app will keep track of that for you. There's a few key bits of tech that help that work. For instance, a traditional banking app doesn't show your transactions for that day. It's always 3 days old. So how can a traditional bank help you work out how much you should spend that day when they don't even know what you spent that day? So with us, the second you make a transaction, you get a push notification. It's in the transaction feed in the app, and it's already categorized. So everything's already done the second you make a payment. And based on that, we can keep track of your spends much easier than a traditional bank. That means our budget circle in the middle of the app can keep track to the second.
Okay, and you haven't followed the other challenger banks down the road of getting a banking license. Why is that?
It doesn't make sense from a financial point of view. The way we operate is we use banks for their tech and their infrastructure to go live. Banks are very good at their infrastructure, so why can't we use that and build a better product? And I think that's our key route to market. It keeps us much cheaper than the challenger banks, keeps our unit economics much better, and it means we're much faster. So our whole team is focused on product and development rather than banking licenses and dealing with all of the more complex parts of banking that a bank is really good at.
Because a lot of the banks sort of feel a bit weighed down by all the regulatory environment that they have to work within.
Exactly, it's very difficult, and you'll need a lot of team members and a lot of money to be able to do that well. So with us, we can stay super lean on product team and still develop a really great product.
And in today's environment, how difficult is it to get funding, let's say, from venture capitalists?
Yeah, I think it's pretty tough. So I'm a first-time founder, so being a first-time founder makes it that extra level more difficult, and I'm a single founder as well, so that makes it even harder. So I think my experience is it is fairly tough, but other people find different things. VCs, particularly in Europe, want very clear unit economics and very clear assumptions. So everything, I guess, in starting a business is assumption-based, and your job is to limit those assumptions down to the smallest number. And as long as you do that well, you can always fundraise. But it's the amount of assumptions a VC's happy with is much lower than it used to be.
Okay, and then my last question is around Brexit.
Yeah.
How do you think it's going to affect the fintech community, let's say in London?
It really depends on two things, which is funding and passporting. So back to the thing I just mentioned about VCs is they don't like assumptions. So right now there's way too many that aren't in a fintech company's control, being regulation and being the landscape of London in Europe. Nobody knows, and it's all assumption based. So that's meant that a lot of fintech startups have really struggled to get further funding. So that's going to stay the same, and as a result, we'll probably see a lot less come about from fintech, particularly from London, based on funding. The other thing is passporting, and if UK loses passporting, it doesn't make sense for a fintech startup to be in London first, where there are other great European capitals where they could start from. So I think it'll be super interesting to see what happens.
Okay, great. Thanks so much for coming in today.
Well, no worries, thank you.